morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're talking international markets, international equity markets to be specific, and it's been, well, to say the least, quite a rough January, the first trading month of the year, and very surprisingly, US and international broader stock markets are down quite a bit. Let's take a look at what would have happened, what might be driving this performance, and what investors could expect in the coming months. Now, regionally, exchange-traded funds, which broadly represent market performance in US dollar terms, have been generally lower in Asia. We can see, for example, in 2022 for that first trading month of January, as at market closing levels on Friday, down just around 4.5% compared to a 6.4% increase in 2021. That is January 2021. Europe was also down just around 5%. Latin America, one of the only regions that really bucked that trend, up 7% compared to their performance of 5.5% down last year. And the US, of course, one of the major investor focuses for equity investors, down 7% after eking out a very small gain of 0.2% in January of 2021. When we take a look at some of the major indices, some of the more popular indices, we can see that it was pretty much one directional throughout the course of the month, having traded fairly flat in the earlier stages. The NASDAQ composite, for example, in that green line is down 12%, of course, very heavy in terms of technology exposure. The S&P 500 index, which is a broader stock index measure, down just around 7%, and the Dow Jones Industrial down 4.4%. So despite that very late rally towards the end of last week, Friday in particular, equity markets are still feeling quite a lot of pain. When we take a look at the US sector performance, overall, again, that S&P 500 down 7%. Some of the worst performers for the month so far, consumer discretionary, and this is perhaps a reflection of investors' concerns about prolonged and excessive inflation in the US market, and that could weigh on investors, consumers' purchasing power for discretionary items such as durable goods, cars, vehicles, appliances, etc. Other items that are discretionary in nature. Real estate is also down 9.6%. Technology, as mentioned, down around 9%. The only sector in the green is energy, or has been energy, up around 18%, and we all are aware of burgeoning energy prices, particularly in the oil and gas space, and that is in fact contributing to some of that inflationary pressure. So one has to wonder, will the energy rally remain intact, or if policymakers do decide to take some actions to arrest that imbalance in the demand and supply configuration in energy markets, will that weigh on energy stocks over the next coming months? Technology stocks, as we mentioned, were one of the worst performing sectors. When we take a look at some of the larger and more popular names, Netflix, for example, the online streaming giant, down 36% in the first month. Tesla, led by the eccentric Elon Musk, down just around 20%. Amazon down 13%. PayPal down 13%. Facebook, Microsoft, and Google down between 10 and 8% respectively. Apple holding relatively firm, down just 4%, and we see that relatively down just 4%. So what should investors do? Is this a buying opportunity, or should investors be a little bit more concerned and cautious in the next trading month that's coming up and in the months ahead? Well, of course, any very significant pullback of that 8 to 10% always represents a compelling entry point for investors, or an opportunity to average down. So if you are going, well, go with caution, but diversify within the stocks that you're holding, diversify by sector. As we can see, there was very broad-based, a very wide range of performances across most sectors, diversify by geography. As we can see, Latin America was one of the stars relatively for the first trading month of the year. And of course, diversify by asset class. If you're not as comfortable investing in equities and cannot bear the volatility, look at other investment options such as the fixed income space or mutual fund space, where there's a little bit more diversification for you as an investor. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at invest@boursefinancial.com, or check out our website where all of our research is absolutely free at bourseinvestment.com. And you can catch us in the business section of today's Bigger, Better Trinidad Guardian newspaper. Stay safe, get vaccinated, and see you next week on the Bourse Report.